Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to work our way through the dollar, yields, precious metals, and commodities and ETFs that I follow. I'm going to interject my financial opinions across the board. And if you guys need help with anything, check out, hopefully it's always backwards, finding-value.com. We do have a discount going on. It's only good for 2 days. Today and tomorrow. The coupon code is spooky, and you can see the discount below if you want to look and see what that discount is in the description link. So let's dive in here. I'll give you my financial opinions and see what's going on with the markets today. So we got the DXY. The DXY, remember this is a relative strength dollar index is really what it is. We are lower with the dollar today, 0.42%. And what that is measuring is basically the monetary tightness of the dollar versus a handful or basket of other currencies. If their monetary tightness is tighter than the dollar, generally speaking, you'll see the dollar go down. If we are tighter, the dollar and the interest rates behind the dollar is tighter than the other currencies, then the dollar generally goes up. That's all it is measuring. It is not an absolute value measurement. So when this goes down, it does not mean that the dollar is gaining strength or losing strength. It's gaining or losing against that other basket of currencies. I just want to make sure everybody understands that. Generally, we see certain traits when the dollar strengthens. Generally, we see certain traits when the dollar weakens. What I would like to see, and what I think will kick off a wave 3 move, a big wave 3, is when the dollar goes down and interest rates go sideways to lower. That is what I think will kick off a big move where everything in commodities will really start to heat up. So we look at yields. Yields are still resilient. We haven't broken any sort of structure yet, and yields continue to be resilient. They're coming up in this channel that we've got. So the dollar has remained strong. Yields have remained pretty strong across the board. So this is the 2-year. 2 years still hanging in there. We haven't broken anything yet. We've got the 10-year yield, which is still being resilient. And I can't tell if this is going to break to the downside or if this is just a continuation pattern. Again, we're going to have to wait and see. The momentum is definitely to the upside. The projected move of some of these patterns are also further ahead of us to the upside. So everything still looks good for a potential move to the upside, but we do have 2 bearish engulfing candlesticks, which sometimes can lead to a downward move. So we've got momentum to the upside, some short-term selling pressure with the candlesticks, and in all honesty, guys, we're going to have to watch and see where this goes. The 30 years got the same thing as the 10-year, and I'm just kind of drawing it in there. Is this a continuation pattern where it breaks and moves to the upside? We'll find out here very soon. Why does it matter? When interest rates go up, generally speaking, crude oil is pretty strong. When interest rates go down, crude oil, it can still go up when interest rates go down, but other commodities will do well when those interest rates go down. So it doesn't mean because interest rates go down that oil is the only one that goes up. When interest rates go up, oil and energy markets are very strong, and a lot of the other commodity sectors may or may not be that strong. The overall market will also pull back in a very strong interest rate increasing environment. So all of this kind of matters. It's the background information. It's the pricing structure underneath all of the other asset classes. It comes from yields, more specifically the 10-year yield. So if this drops, more than likely you're going to see gold rip it. You're going to see platinum rip it. You're going to see silver rip it. That's the condition that they do well under. Oil may or may not do well, depending on where we are in that cycle and the supply-demand imbalances and characteristics. So the TYX TNX ratio, this is the ratio that I use to gauge where gold potentially could go. And most of the time, if you're looking at this general area at a very inverted yield curve, these areas down here, those are generally very good entry points for precious metals. It's almost like it's cheating if you can be patient enough for these to turn around. Now, if you look at some of these areas, it went from '05 all the way to '07, so it was a 2-year kind of stall in the inversion of the yield curve. That could very well happen over here for even longer than when we've been down here since April of 2022. So we could be down here for a few years. Now, some people will say that's an opportunity loss. I would say it's a window of opportunity to accumulate a bunch of very low risk metal where you could get a big upside move when this goes and uninverts. That's the way that I see it. It's a window that you can pile into it. TLT, which is the bond prices, yields go up, bond prices go down. Is this a continuation pattern, or is this trying to put in a bottom? I don't know, with any sort of certainty what that is yet. It's got the bullish engulfings here. It's the same inverted move of yields with those two bearish engulfings. Are we going to try to put together a move to the upside, or is there further selling pressure in the bond market, which is going to increase interest rates, which is going to have more selling pressure in the overall stock markets, stronger energy prices, et cetera, et cetera. So we're just consolidating right at this moment. We'll have to see which way this thing breaks. A lot of people think that bond prices are going to go up. I am not in that camp. I am remaining completely neutral. I think that bond prices could still go down and interest rates could still go up. I think that is a possibility, strong possibility. So we look at gold. Gold is looking fantastic. I am uber bullish on gold. If we close tomorrow anywhere near where we're at today, that's going to be a very strong closing. And if we can get more momentum tomorrow to the upside, uber bullish, because we're going to have a very big monthly closing, which is a big bullish engulfing here and another bullish engulfing here, which generally is a move to the upside. So that looks very good. Today we were up, a little bit of momentum loss because it gapped up. It looks like someone's trying to hold this thing down, but more than likely they will get overwhelmed. So I think this is positioned absolutely excellent for a move up in gold. And remember, when the yield curve inverts and it uninverts, gold is one to rip. Now, it doesn't mean that that has to uninvert for gold to go up. It could stay low. In the 1970s, gold bucked the trend when the interest rates got above 5%. We're real close to 5% interest rates on the 10-year. We're at 4.874. If we go above 5, it's possible that gold rips regardless of where interest rates go. So I think gold is a very good opportunity here. Silver is also, I think, another good opportunity. You can see the big buying pressure, green candlesticks, and not much selling pressure. That is exactly what I look for in the ingredients for a potential move to the upside. It's that big buying pressure force. It's like someone hitting it with a hammer. They hit it with a hammer and no response. They hit it with a hammer, no response. They hit it with a hammer, no response. And that's basically the stair-stepping pattern that I look for. So it looks really good. And all we're waiting for is gold to move. And I think silver is going to do a blast off. Could do some crazy stuff. Now, platinum generally leads these big moves. Platinum was up massively today, 4%. Now, does that look like a breakout? I did not redraw these lines. I had kept them completely stable. To me, it looks like a pretty good breakout. Now, we could get a bloody nose tomorrow, little down day, profit-taking day, a little bit of selling pressure. Don't worry. Play the big move. Don't worry about these small up and down movements. We could even come back to 910 before heading higher. The way I view that, another buying opportunity. Last bull market, we could see the beginning of the bull market in 99. We outperformed, then we came back, and then we ripped. Now, is this the same type of move? and now we're about to rip. I don't know. We'll have to wait and find out. But platinum did very well in the beginning of the last bull market, and it outperformed silver, and that was the opportunity to do a little bit of swappy between platinum and silver. When platinum outperformed in the beginning, you could swap to silver, and then silver killed it, and then you can have lower back pain because you're going to have to lug all that silver around after swapping it, and then you want to swap it back to gold. But yeah, platinum looks great. It's breaking out today. Fantastic closing day today. Palladium also up today, but again, I think this is out of cycle. A lot of the times when palladium did very well, it did it during a different market condition. That's all I'll say. XAU to gold ratio, even though gold was strong today and silver, the gold and silver mining companies still are not responding to that move. I don't know if it means that they don't believe it, or people are waiting for that stimulative juice to come back in the market to invest into gold and silver mining companies. Stimulative meaning lowering interest rates, quantitative easing, yield curve control, whatever the heck they're planning to do. It just isn't convinced the gold and silver mining companies yet. But this is at a very cheap level. This is something I would definitely be watching. It's on my radar. If we break up, you're going to see me get bullish as heck. I'll just say that. CRB index down a little bit. I know oil was down today, so here we are back to the support level. A little bit stronger selling pressure. Could see a little bit more downside. We could even come back to this support level down there at 274. Possible. CRB to S&P pulling on back a little bit today. Down 2.7%. Again, I'm in the camp that commodities are still going to outperform the S&P. That's my framework of mind right now. GDX down, even though gold was up right at resistance, going across. GDXJ, we're at resistance going across when you start putting horizontal resistance lines. SILJ also down a little bit. Again, we're at that resistance line going across here. There's also strong resistance coming across that level there with all these contact points that we've hit multiple times. So we're underneath resistance right now, and it's going to take some time to bust on through it. And we need breakouts on the metals, I think, for these to break out. Crude oil down quite a bit, 3.6% roughly. We're still above the $82 level. Are we going to break down to the downside and have further selling pressure? It very well could. I'm not saying that it can't. And we could get a flush out where people get scared. I don't think any of the problems are solved in oil and or energy. And this could just be positioning in the market. And maybe we even come back to 60s before heading higher. It is a possibility. Now, I'm not claiming that is necessarily where it's going. We're at support. We'll see what happens. We can also do a little bit of fun work here, and we can kind of move this up here. One could even say, you know what? Is this a shoulder, kind of a double head, and then another shoulder developing? The support level of that other shoulder is around $78. That could be another area that you might want to look at, $78, and see if we hold at 78. If that's the case, and this is an inverted head and shoulders type of pattern, maybe we get a rip in here at some point after we hit like $78. We could get some really good buying opportunities in some of the energy service and exploration production companies. TTF, this is nat gas. TTF still looking fantastic. We are above this basing support area. You can see that we kind of worked our way up. We've broken through that. We had another consolidation on top of it. We're sitting on top of all that. So I view it as pretty bullish. Nat gas down 4%. We ripped yesterday. We're creating these gaps all over the place, looking kind of ugly, but we're on top of this big old base. We've broken out, we've come back, and we're starting to work our way up, I think. So I like natural gas. It looks really good, and it's cheap against a lot of the other assets. XOP still looking good. XOP, yeah, you know me. I don't want to leave you guys hanging there. Notice that crude oil, it basically got hit today. but XOP is just hanging in there. Like, what the heck's going on here? Down 0.3% on a 3.5% down day move on crude oil. So it does look like people are still buying the exploration production companies. Same with OIH. It really didn't move. It just sat there. I'm not stating that this is going to sit there forever if oil does pull back into the mid 70s, but it's being quite resilient where it's at. And I think the patterns long term look very good. There's nothing here to be worried about, like it's a topping pattern or something could get blown out. Now, that doesn't mean it can't get blown out if the overall markets were to take a spin, but it's holding in there today. Sprott Physical Uranium Trust up 1.85%. It still looks pretty good. There's no kind of reversal candlesticks or anything in here. And the momentum's to the upside. So we'll see if it continues. URA up 1.9. It does look all right. And again, we'll see if it continues. That's all I'm going to say. URNM up 2.18 and URNJ, it's the same type of trading pattern. And we'll see what the next few days bring us. It's on top of support, or on top of patterns, I should say. And I would favor it to the upside until we see reversal candlesticks. TAN up 0.9, up 1% basically, but it's still struggling. It is still struggling. It's trying to find support right where it's at. COPX down. This is the copper mining ETF. We are getting a little bit stronger selling pressure today. Maybe we've got a little bit more downside left in this bad boy. And maybe we want to touch the $30-ish level. Now at $30, guys, that is going to be a steal. And some of these diversified mining companies, they're paying big dividends. I'll take it. I'll just say that. Lithium, still getting some selling pressure. Still looks like we could come back to that $36 level. I'm not as convinced in lithium. I don't really have strong holdings in terms of like big percentage allocations to it, but it does look like we could still go lower. Rare earth metals also, it seems like the renewable sectors are, the steam's coming out of them to some extent. Maybe people aren't investing in those because of ESG reasons. Like they don't care about ESG anymore, environmental, social governance. But that still looks like we could go a little bit lower too in rare earth metals. The S&P 500 holding in there, but again, this is not a reversal candlestick. Momentum's to the downside. That's what I'll say. Momentum's to the downside, and I'm going to stick with that until we start to see some reversals. Same with the NASDAQ. We are underneath resistance. The momentum's to the downside, and this could very easily crap on itself to the downside. I'll just say that. KRE, again, no broken downtrend line for the regional banking ETF, but it does look good. This is a accumulation cylinder, and I think eventually it could go all the way up if interest rates were to come down, and I don't know if that's going to occur. Looking at emerging markets, it's hanging in there, up 1.04%. There we are. Look for weaker dollar, look for lower yields, and I think that'll be the catalyst for this to go up. Lower dollar, lower yields, and these guys priced in other currencies are going to strengthen against the dollar. XHB up 1.33%. No reversal here yet. It's momentum still to the downside. We got to see some buying pressure first. MOO, again, no reversal yet. Momentum still to the downside. This could just be bait. It looks like it's trying to turn. But again, I'm cautious with the momentum behind this. Copper, we tried moving higher today. There's still some selling pressure here. That's why the wick is at the top. Copper has definitely confused me to some degree. If the market is going to go into this big recession and a big pullback that everyone's calling for, you'd see copper go down. Now, here's the thing. China already had that blowout. They're doing stimulus. Iron ore is strengthening. Aluminum is strengthening. And copper is in between. This could very well break to the upside. I'm going to reserve my judgment. Well, let's wait and see where this data goes over the next few weeks. Iron ore ripping to the upside. I am very bullish on iron ore, steel, dry bulk shipping, this still looks really good to move higher. That looks very strong. Now, what are the chances of iron ore being strong at the same time that copper is weak? That's interesting. That's what I'll say. Very interesting, and that's why I want to hold my judgment on copper because I think it's got the potential to break to the upside. Nickel, I don't know what's going on here with this malarkey here, but again, it's been going down. I feel like nickel is almost been controlled by the JP Morgan bros. I'm holding, I don't have any position really in nickel outside of my diversified mining companies, but I'm kind of holding judgment there. Aluminum looks really good. I think aluminum could rip it here. We came on down back to support, and then we got the green army showing up. So that looks good to continue higher. Aluminum looks pretty strong. Baltic Dry Index taking it on its knees here, getting a little bit more of a selling pressure. We're back to support. We'll see what this support does here. Hopefully we get some support. We bounce sideways and then break to the upside. Newcastle coal down 2.86%, kind of following natural gas. I like it in this general area. I think it's going to find support here. Now, here's the thing. If we get a slowdown, because everyone and their mom and grandmas, they're all talking about slowdowns and recessions, and you go onto YouTube, all the clickbait YouTube people, everyone's screaming recession, recession, recession. Generally, a recession doesn't come when that occurs. But if it were to come, this will stay down there or could potentially go lower. If it doesn't come, and those guys are all wrong, which is a high probability, then we're going to rip to the upside with natural gas. Nat gas is broken to the upside. I'm bullish nat gas. By default, I'm bullish on coal. So I think there's some opportunities there to look for potential coal companies. BTC, this is Bitcoin down a little bit, but again, where's the selling pressure here, guys? That's pretty weak for a selling pressure day, 0.4%. So what am I thinking? Support underneath. We could come back a little bit, and then we rip. How is that possible? If we're going to have a recession and a slowdown in the market, how is it possible that Bitcoin could rip to the upside? Well, maybe it's the same reason that gold's ripping to the upside. Maybe there's some sort of liquidity, yield curve control, quantitative easing. I don't know what it is yet. The news will come later, but maybe people are positioning, Powell's boys over at JP Morgan and all the such. They're probably positioning in this like, oh, we know what's coming with insider information. Then all of a sudden they release that information. Yeah, and Ethereum's holding strong too. That looks good. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel if you'd like. Everything still looks good. It's still holding together outside of the overall markets. The overall markets, like the S&P, NASDAQ, no. But natural gas looks good. Uranium still looks good. Crude oil is still sitting on top of support. Hasn't broken yet. Could it come back to 78-ish? Yeah, it could. I don't deny that. We're in the fall. It's kind of between driving season and winter. I get it. Demand's been strong. And aluminum looks really good. Copper could look good. We'll see. And then we've got iron ore that looks good. So a lot of these commodities look pretty solid here. A lot have pulled back to support levels. That's where I like to cost average in a little bit. So that's what I've got. Don't forget, again, if you are interested in signing up to the website, there is discounts that are going on for today and tomorrow. Spooky is that discount code. It's related to Halloween. My kids love Halloween, so I was like, well, let's throw a discount. Why not? So there's a discount out there if you want to join the community. We talk about individual companies. We talk about investing, portfolio allocation. We talk about what I look for in individual companies, cash flow rich companies versus speculative companies, how I weight those differently. I just don't look at technical charts. I look at behind the scenes to some degree, and I say, look, are we going into a tightening scenario or not? Is it easy to build this equipment or not? If we're going into a tightening scenario and it's very difficult to build the equipment and very expensive, and we've got higher interest rates, which is more difficult, it's basically a moat around that sector, then I get more interested in it. And I put higher allocations to it. If it's real cash flow rich, I put even more money into it. Remember, guys, cash flow or earnings per share is what drives stock prices in the long term. It's no different in commodity sectors. The only difference is you can't necessarily evaluate a company today and say, look, they're not making money today, because the most important thing about commodity companies is the commodity price itself. Commodity price goes up, it drastically changes the balance sheets for a lot of these companies, especially those that are high cost producers. That is where you get your multiples. That is where you get your 10, 20, 30 baggers. How do you do that? When a company makes no money and the commodity price is at the spot where their break even is, they're not making any money. When the commodity price goes up, when it goes up dramatically, then you earn a multiple of their earnings based off of where they were before. So if they're not making any money and now they're making a boatload of money when it's $10 over that break even point, that is your multiple. That's where all the multiples comes from. So when you look at a lot of the companies that we've been looking at, and if you're a major bull on the commodity price, where that comes into play with the higher cost producers is you're going to get a lot of volatility up and down around its break-even point. Then when it breaks up, you're going to make a lot of money. That's where it really takes off. They're also a little bit more volatile. So when these things squeeze up, and right now we're at low levels for a lot of these companies. When the right market conditions come, and maybe it's we measured in weeks, months, or maybe even measured in years. When it goes, it's going to go, and that's where your big money is made. Cash flow, infrastructure rich companies, higher cost producers, and then the commodity goes up above it, and then it's party time. I'll just say that. But that's what I've got for today, guys. We'll catch you later. This is Finding Value.